Welcome to Earnings Central. In this video, we'll break down DigitalOcean's fourth quarter fiscal 2024 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q4 was $200.6 million. The company actually reported revenue of $204.9 million, surpassing expectations by 2.1%. This quarterly revenue also marked a healthy 13.3% increase compared to the $180.9 million reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q4 was 34 cents. The company actually reported an EPS of 49 cents, crushing expectations by 44.1%. This result also reflects an 11.4% increase compared to the 44 cents per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. The first noteworthy metric is their net dollar retention rate, which reached 99% in Q4. This is a significant improvement from 96% in Q4 of the previous year, and shows that existing customers are expanding their spending on the platform. In fact, for traditional cloud services, NDR actually hit 100% for the first time since June 2023, signaling that they've turned a corner on customer retention and expansion. Next, we have Scalar Plus revenue growing at an impressive 37% year-over-year. DigitalOcean has introduced a new customer category called Scalars Plus. These are their highest spending customers who have an annual run rate of over $100,000. These customers now represent 22% of total company revenue, highlighting the company's success in moving upmarket. Their profitability remains strong with 42% adjusted EBITDA margin for both Q4 and the full year 2024. This demonstrates DigitalOcean's ability to maintain cost discipline while continuing to invest in growth initiatives. The company also delivered 18% adjusted free cash flow margin in Q4, which is 500 basis points higher than Q3. This improvement was attributed to timing of capital investment payments, though there will continue to be quarterly variations in this metric. Their gross margin improved to 62% in Q4, which is 300 basis points higher than the previous quarter and 500 basis points higher than the prior year. This increase was primarily driven by revenue growth and a change in the useful life of their servers from 5 to 6 years. Finally, DigitalOcean ended the quarter with $428 million in cash and cash equivalents, maintaining a strong balance sheet that provides flexibility for future investments while addressing their 2026 convertible note. Now, let's shift focus to some of the key insights and takeaways from the earnings call. Perhaps most impressively, their AI or ML platform is growing at over 160% in terms of ARR. The company exceeded its guidance of 3 points of overall growth contribution from the AI or ML platform. Their prudent approach to AI investments allows them to ramp up investment where they see customer demand. For example, they've increased allocation of GPU capacity for their GPU droplets after quickly running out of capacity when launched at the beginning of Q4. DigitalOcean has dramatically accelerated its product innovation pace, which is now 4x year-over-year. In Q4 alone, they released 49 new products and features, which is more than 4 times what they released in Q4 of the previous year. Most of these enhancements directly address the needs of larger spending customers, helping remove blockers and implement capabilities needed to scale on their platform. As mentioned earlier, Core Cloud NDR reached 100% in Q4 for the first time since June 2023. This is a critical indicator that the company's focus on product innovation and customer success is paying off, as their traditional cloud business is now stable and growing again. The company is opening a new Atlanta data center coming in Q1 of 2025. This facility will provide incremental capacity for both AI and core cloud offerings, while also functioning as a lower-cost facility as part of their longer-term data center optimization strategy. DigitalOcean now has over 500 Scalar Plus customers for the first time in the company's history. These customers, who spend more than $100,000 annually, increased in count by 17% year-over-year and represent 22% of total revenue. The average revenue per user within this group grew 18% year-over-year, showing that not only are they acquiring more large customers, but these customers are also increasing their spending. Finally, the company is putting a strategic focus on cloud migration from hyperscalers. At their recent Deploy conference, they launched a new migrations program designed to seamlessly transition cloud workloads from hyperscalers to DigitalOcean. This program aims to eliminate migration-related complexity, deliver lower operational costs, and provide seamless technology assistance through their partner ecosystem and a newly formed solutions architect team. For 2025, DigitalOcean is guiding for revenue in the range of $870 million to $890 million, representing approximately 13% growth at the midpoint. They expect adjusted EBITDA margins between 37% and 40% and adjusted free cash flow margins between 16% and 18%, which is slightly ahead of their preliminary indication. Management emphasized that while customer acquisition, including new AI or ML customers, will continue to contribute the majority of growth in 2025, they expect NDR improvement and expansion from existing AI customers to have a neutral to slightly positive impact in 2025 compared to being a headwind in 2024. The company is also planning an Investor Day on April 4th at the New York Stock Exchange, where they'll share more details on their longer-term strategy, progress metrics, and long-term financial outlook. That wraps up our recap of DigitalOcean's fourth quarter fiscal 2024 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.